Social Capital founder and CEO Chamath Palihapitiya knows a thing or two about tech and Facebook. The venture capitalist, former Facebook insider, is counted as one of Silicon Valley's most candid tech leaders. Earlier, we spoke with Chamath to get his take on some of the top tech headlines. I started by asking him about his concerns about President Trump's policies.
It's really not the policies, quite honestly, but it's the unintended consequences. And specifically, what I think is really scary is about what the long-term impacts to human capital are in the United States. So if I had to use a sports analogy, when your job is to win a championship, what you do is you try to draft and recruit from free agency the absolute single best players in every position you can, put them on the field or the court in order to win. Similarly, the United States, up until, frankly, quite recently, has been that equivalent for human capital. If you were very good or really good at anything, you wanted to come here. And what's interesting is the early data is starting to show signals that that is changing. And I think that's bad. So that's irrespective of any ideology. We want the smartest, best people here working on behalf of Americans and America. And anything that impacts that, I think, has long-term negative consequences to GDP and value creation.
How's he impacting venture capital so far?
Well, so again, on the human capital side, I think what we're seeing is a lot of businesses that are frankly having a terrible difficulty recruiting people. And so what that means is wage inflation, which doesn't really add to anything because all that means is you're burning more money without necessarily incremental productivity, number one. Two is you're starting to see competitive businesses now be created in increasing velocity outside of the United States, in Canada, in China, in India. That's generally bad if you think about businesses that could theoretically be built here where the value then is captured within the United States.
So you think the U.S. could lose its pedestal?
Oh, no, I think it's losing it. In fact, we saw a report today that said that MBA programs, and we can debate about the long-term value of MBA programs, but they've seen the most marked decline in applications from foreign applicants. Now, in the short term, that may be good, but in the long term, the reality is there are some free agents we should just be poaching from other countries and putting them on our team.
You spent a lot of time with Mark Zuckerberg in the early years navigating some rough times at Facebook as the company matured, as Zuckerberg matured. Do you see any parallels with what's going on with Uber and Travis Kalanick?
It's hard to know because I'm not in the situation in the boiler room at Uber. But here's what I'll tell you about Facebook, which was that in those moments where we push certain boundaries, say, for example, in the way that we build and design certain products, or, how we were exploring the consequences and the reach of privacy, and we had our hands slapped or we learned things, what we did was internalize the cost benefit and the trade-off of the potential of what we wanted to build and the impact of that to humanity versus taking a more methodical approach. And since then, I have to say, Facebook has been basically flawless. And I think the opportunity for them to realize is that their ego is not nearly as important as their impact. And the minute that you make that transition, there's just a different caliber of individual, particularly at the very senior ranks, that you can attract that will want to work with you on those kinds of problems. And it seems, at least from the outside, that there's a lot of early signals that that transition is happening. So I hope that it's working because the human potential impact of Uber is undeniable.
So what are your recommendations to Travis specifically? In your position outside the boiler room as an observer?
Well, I think that when you are in a company that is that iconic and unique, the biggest thing you have to do is become a lot more introspective and become what I call inside-out validated. So, when stars and famous people and rich people and CEOs call you and want to spend time with you and take you out and invite you to things, all this external validation that tells you you're important, you have to ignore it. And in fact, you have to run away from it. And you have to spend time with your engineers in the boiler room of making the product every day. And when you strip yourself of that outside validation, you learn to validate yourself inside out. And I'm not saying that he hasn't done that, but what I will tell you is if you can make that transition, you become an extremely powerful CEO, and I think Mark is a great example of what that looks like.
My colleague Brad Stone wrote a book comparing Uber to Airbnb. I'll put the question to you like this: Uber or Airbnb?
I think if you had to pick a more natural monopoly that had pricing power at scale, I think it's Airbnb. The reality with Uber is that it is a fundamental consumer surplus business where there is still risk that the entire business model is about cost of capital, meaning that in a world of autonomy, what you have is the ability for new entrants with huge balance sheets Google, Apple, Facebook, companies that you never would have imagined competing with you could, because it is just a function of having enough money to buy enough autonomous cars because you already have the customer reach, and you can then model the demand well. So in a market like that, there is potentially value erosion over time because you have more players, not less. Now, in the case of Airbnb, what they really have to navigate is cost-effective customer acquisition at scale. So instead of having many problems and many potential competitors, Airbnb has to solve an internal capability issue. And if they solve that, then that is probably the next massive company to come out of Silicon Valley.
You're really bullish on Amazon, though you also spend a lot of time at Facebook. Amazon or Facebook?
So, the thing that I think about is you have to fundamentally be in the largest, most unconstrained market possible. And when you look at the world and where dollars are spent, advertising in and of itself is a $200 billion plus market. It's created now $1.1 trillion of value between Facebook and Google. It's incredible.
But Facebook is running out of space to put its ads.
But at the end of the day, the thing that is fundamentally unconstrained is consumption by consumers. Wherever there are people who are making more money than they spend, they will find a way to allocate whatever's left over to buying things. And to the extent that buying things is the most important part of GDP, which it is in America, and it tends to be in most developed nations, the company that dominates in selling you things you want to buy will probably be the largest company in the world, and probably by many orders of multiples than anything else. And so, I'd have to pick Amazon.
And you have historically been fairly pessimistic about Apple. Where are you today?
We don't hold it. I look at it as a really interesting value stock. I don't view it as a company that represents for me what I want to own, which is, basically innovating on the future in ways that represent change. And at the end of the day, I also think a balance sheet that distributes cash back to investors is essentially saying, we believe you know what to do better than we know what to do. And so I think all of that speaks for itself.
You have been a big bull on Bitcoin.
Yeah.
We had some folks that some people know on our show earlier this week. Becky was out in Omaha. I want to show you what they had to say if we could roll the tape on Bitcoin from Mr. Munger and Mr. Buffett.
The asset itself is creating nothing.
I think it's a scumball activity.
I would short it if there was an easy way to do it.
So there you have it. You have Bill Gates, Warren Buffett, Charlie Munger. One of them was calling it a scumball activity. The other saying, Bill Gates saying he would short this thing if he could. And you're saying they're all wrong.
Yeah.
Explain.
Well, look, not everybody is right all the time. And I think we have to acknowledge that we all have biases. And look, I'm a disciple of Buffett and Munger. And one of the things that they have said for years, which I believe, is you define a circle of competence and you stay within it. And I think it's been clear in his entire investing career that technology is not in his circle of competence. And so the only technology name that he's owned is Apple. I mean, you could claim that IBM was a technology company. That's borderline.
It's out of that. That didn't work anyway.
Right.
And Apple, I was thinking that if he got in Bitcoin, if he eventually got in Bitcoin when he eventually got into Apple, it'd already be at $1 million probably.
Probably.
But Chamath, just going back to this, I don't think he looks at it as a technology. I think he looks at it as an asset class that he would put in a similar class with gold. Just it's a non-productive asset. It's an asset that is only worth more if other people agree to pay more for it. That's the type of issue that he's talking about.
Which I also agree with. I think it is exactly that. I think it is a replacement to gold. But again...
But you like gold. You're saying you like non-productive assets.
I like in a portfolio. Again, my portfolio is 99% risk on, 1% risk off. And in that 1% risk off bucket, I think that something like Bitcoin is really important. Why? Because it is not correlated to the rest of the market. And the biggest thing that's changed...
You don't believe that the success of Bitcoin over the past several years has been correlated to the market? I would say not directly correlated, but clearly so the idea that there's as much liquidity and cash sloshing around in the world has allowed people to buy into Bitcoin in a way that they wouldn't have, frankly, if the market...
That's different than being correlated to a strong economy or earnings.
But there is
that's a liquidity argument. That's not a correlation.
I've been in the Bitcoin market since 2012. And I feel like I'm in two different universes. I need a passport to go between the Bitcoin world and my regular world. These are not the same people. And what I would tell you is the people that owned Bitcoin in 2012 all the way up to now, the majority of those people view it as a hedge to the traditional financial infrastructure. Whether that's true or not is unclear, but that's how we've all viewed it. Separately, what Joe says is absolutely right. There's a big difference between correlation and liquidity. And the reality is all of these financial assets in the traditional markets are fundamentally correlated. We saw that in 2007. Everything broke down. Things that we thought were hedges went away. And so I think it's really important to not forget what happened there. So in 2018 or 19, heaven forbid we go through another cataclysmic financial event, we are going to see the same fundamental correlation. And so again, I ask, why would it not make sense to have a non-correlated hedge? For a small amount of, this is about buying insurance. It was the same reason why in 2007 and 8, the folks that bought simple insurance, bought some CDS,
But you might
looked
as
like
well
heroes.
buy gold. I mean, at least gold's got a 3,000 year, or 10,000 year record of being a store of value. I mean, I think that's the other thing Buffett's saying. There's no reason to think this is a store of value.
I think that's a fair point, but I think these are not exclusive decisions. And you know, for this younger class of entrant into the market, they probably don't want to buy gold. In fact, they don't want to buy gold, and they want to buy something that's much more digital and reflective of their values.
How do you feel, though, about the idea that Charlie sort of suggested, that there's something sort of scummy about that, or that there's a lot of scum in the crypto world right now, and that there's a lot of people who have been sort of sucked into this world, that have bought into this world by some folks who may not be as...
Look, I think it's really unfair to not understand something and then to disparage it. Again, I think he's exceptional. I think Warren Buffett is exceptional. I think Bill Gates is exceptional at what they do. And I think it's fair to say that in 30 or 40 years, if I'm, you know, a vibrant, successful investor, and if I'm back on this show, the idea that I know what's happening 30 or 40 years from now, as well as some other new 40-year-old or 30-year-old entrant into the market, is just not true. The reality is things change.
Delighted to be joined by Chamath Palihapitiya. We're really pleased that you've joined us. You're the CEO of Social Capital and the fairly recently installed chairman of Virgin Galactic. So I kind of wanted to talk to you about a number of things. We'll split it into two parts. One is with your new hat on, and one is with the other hat on, okay? So, I mean, Virgin Galactic as a brand and a concept has actually been around for a while. I remember seeing one of their other former executives many, many years ago talking about the concept, and there was a lot of, okay, that's really cool, but it felt like it was always going to be such a long way away. And they've had a few ups and downs, some unfortunate ones and things, but you're there now. Just give us initially, Chamath, your kind of umbrella view of where that business is and the technology and the opportunity, first of all, please.
Well, I think the opportunity is one that sort of is at the intersection of a bunch of very important trends that are happening in society as we speak. So I think that the commercialization of space travel and the ability to do space tourism was a phenomenon that I think many people thought would be real, but many decades out. Well, it's been many decades since they said that. And so I think the time is now. And over the next 20 or 30 years, I think you're going to see a lot of incredible companies push the envelope on exploration and privatize what has historically been a business that's been run by governments. And as we do that, I think what you're going to have is the creation of a completely new type of luxury experience and market. And in that, I think that there's going to be a lot of opportunities up and down the stack, from the technology that's used to build these machines that are capable of sending people safely into space and back, all the way through to the travel and the accommodations and the experiences, not just for the people that are in space, but frankly for the friends and loved ones of the people on the ground watching. And so that entire ecosystem is going to develop out of nothing. So part of my interest was piqued by that, which is, you know, sort of in this social media world that we live in that values experience more than anything else. It is probably, undebatably, the most unique experience in the world. You may be surprised to know that in the totality of humankind, meaning everyone that's ever lived or are living, of which there are about 100 billion of us, 562 people have gone to space. And so I think that it's a moment whose time has come. And when you think of all of these trends, there's just going to be a lot of curiosity that's piqued And you'll be able to satisfy that curiosity and actually buy a ticket and experience something that, frankly, basically virtually nobody has up until now.
When a company fails, it does not fire their employees. It goes through a packaged bankruptcy, right? If anything, what happens is the people who have the pensions inside those companies, the employees of these companies, end up owning more of the company. The people that get wiped out are the speculators that own the unsecured tranches of debt or the folks that own the equity. And by the way, those are the rules of the game. That's right, because these are the people that purport to be the most sophisticated investors in the world. They deserve to get wiped out. But the employees don't get wiped out.
That moment has gone viral as a summation of a lot of what's wrong with our economy and what the crisis response would be. The man being interviewed was Chamath Palihapitiya. He's the CEO of Social Capital. If you look at this chart of U.S. financial assets that he recently tweeted out, you can see why he's advocating for billionaires and millionaires to get financially wiped out, or at least some of them. He joins me now via Skype to explain. Chamath, thank you so much for joining us. We really appreciate it.
Thanks for having me on.
Absolutely. Tell us a little bit about the inspiration, I guess, of that segment, because so many, millions were really inspired by what you had to say as they look at the mismatch of how Congress is responding to this crisis and perhaps how we should think about our financial system as we go forward.
Well, I think the setup is important. So I have been lucky enough over the last 10 years to have invested billions of dollars in private companies trying to improve healthcare, education, climate change, space exploration. And so a lot of my comments come from the perspective of somebody who is invested in many, many small businesses trying to be well-run, living by the rules and living within the strict guardrails that are defined for us as we try to become successful. And against that backdrop, what I can tell you is that it is very difficult for us to know with any certainty how these stimulus dollars can actually positively affect us. So for good, well-run businesses that were being well-run before this crisis, the ability to know that you'll be able to keep your employees on or that you'll be able to fund what you need is very challenging. That being said, the worst-run companies, the ones that have the most insecure balance sheets, the ones that have been the most poorly run, the ones that have had the most profligate, CEO compensation packages and dysfunctional boards are the first being rewarded in, frankly, the simplest and easiest ways. And so the setup is very unfair. The companies that are actually doing the work on the ground, the private businesses, or even the public ones that have been trying to do the right thing for years to save for a rainy day, aren't getting nearly as much help as the ones that can yell the loudest and or necessarily are the most dysfunctional. And in that, I think both capitalists and progressives have a lot to complain about. And that's sort of the genesis of my commentary.
Yeah, I think that's such a fundamental insight. And what is it about the airline industry in particular that you were looking at there, that you were talking about in terms of bankruptcy and how workers can come out of that actually okay, and that much of this bailout, so much of the money is going to possibly the kind of the worst within our financial system? What is it about that structure that speaks to a broader thing in our economy?
Well, Scott Wapner, the host, brought up airlines as an example. But if you look at that thread and you pull the string, in the last 2 decades, the airlines have declared bankruptcy, I think, about 66 times. So, a couple times a year, 3 times a year. And they still exist and they're still around. At the same time, what you have is that most of the free cash flow dollars that they generated, so the things that you and I would call our savings, the things that we should be putting into our individual bank accounts for a rainy day, they didn't. And they essentially distributed that back to the board, the CEOs, and the hedge funds that were the largest proponents of that activity. And so they're in many ways a great example of not being prepared for exogenous shocks, yet being disproportionately rewarded. The reality is that when many of these airlines have gone through bankruptcy, all the jobs are largely preserved. Delta is a really interesting example. The last time they went and filed for bankruptcy, I think it was in 2012 or 13, They lost 157 jobs out of 55,000. They now employ 90,000 people. So bankruptcies are actually a structured way for companies to be able to reasonably discharge debt. Now, that disproportionately affects sophisticated investors, but it doesn't necessarily, and usually doesn't, disproportionately affect employees or pensions. And so, my whole idea is you have to let capitalism, and this is where progressives and capitalists can agree, you have to let capitalism do its job in moments like this, because the amount of money that we're printing into the system is so unbelievable. Sagar, just to give you an example, we have now printed more than $12 trillion into the economy. Just to give you a sense of what that means that we could have given every single person in the United States their entire 2019 wages and paid off everybody's student debt and still had $5 trillion for companies.
Right.
That's what we've done in the last 4 weeks.
And yet, right, go ahead.
No, I'm saying, and so when you're acting at that level of scale, there are going to be consequences. And those consequences, unfortunately, are going to yield its head in the form of inflation down the line. It probably means that the folks that are going to get the bailout money, who frankly only had to commit to not firing people until September, will unfortunately probably just wait till October and then just do it then. And so it doesn't necessarily put these companies in a better position to thrive in the medium and long term. And that will disproportionately negatively affect employees and pensioners.
I think this is the most important point that you're making here. And I think one of the reasons that the rant kind of went viral was that it was somebody kind of your ilk, traditionally thought of in the business community, an investor, saying, let these things get wiped out. How is that reconciled, I guess? I mean, was there a backlash against you in the business community? Or maybe do you represent, a newer way of thinking about American business?
No, I just think that I think a lot of people believe that capitalism is best when it's left to run as a meritocracy. Otherwise, you only have two paths. When capitalism veers off the tracks, it becomes crony capitalism or it becomes a kleptocracy or both. And I don't think we want that in America. And so for capitalism to do its job in a moment like this, you have to allow a more compassionate view of all of the people that are really being affected. And the employee-centric view would be one that says, let folks who understand the balance sheets of these businesses step in, save them, restructure them, and allow them to be better positioned in the future with better guardrails on things like CEO comp or things like buybacks. But if you allow the Fed, specifically in this case, to obfuscate how poorly run these businesses are, then they are going to fail, but just at a later point in time. And the damage will be that much more severe because the amount of capital that they've consumed between now and then is just going to grow. And I think that's the train wreck that I think that we can avoid as a society in the United States. And along with that, there should be an acknowledgement of the obvious, which is that the United States since World War II has been a consumer-led economy, meaning every individual US taxpayer and citizen has been the one that's driven this country to the forefront of all countries. And if we look at where people are losing revenue, yes, companies are losing revenue, but individuals are losing their own salary and wages at equal or disproportionately larger rates. And so if you can complement capitalism in the capital markets with compassion in the social policy that we employ by putting more money into folks' hands and thinking about, retiring debt or protecting debt levels of individuals as well as just companies. For example, like if the Fed is going to buy the junk debt of companies, there is no reason why they can't retire the $1.4 trillion of debt sitting at the DOE. It's just the decision.
Right. No, you're exactly. This is all just a matter of political will and what society puts its political will towards in a time of crisis. And, I think we'd be a lot better off if there were more people and titans of American business like yourself that thought this way. Really appreciate you joining us, Chamath. Thank you so much.
Thanks. Thanks again.
Of course.
So those were 4 great interviews with Chamath Palihapitiya, speaking on CNBC, Bloomberg, The Hill TV, and about his Virgin Galactic gig as well. such a brilliant guy. He really does take a lot of time and analysis, and obviously being a billionaire has proven that he does have a lot of smarts, and Facebook founder Mark Zuckerberg did find that to be the case as well. But taking Bitcoin into effect and understanding and doing self-analysis and not relying on people like Warren Buffett and Bill Gates and Charlie Munger, who think that Bitcoin is probably not a great investment. He believes that it could be, and you need to have these types of investments so that you're thinking outside the box and you're thinking for yourself. I loved hearing him talk about his latest gig as well, Virgin Galactic, space tourism, amazing. That is a hot button right now with a lot of billionaires, including Jeff Bezos and obviously Elon Musk. So Chamath is going to throw his hat in the ring and has a lot of great ideas. I think in the next 10 to 20 years, you'll start to hear that more and more. Space tourism. That's amazing. Lastly, we finished up with his insight and dialogue on why companies should be allowed to fail. Obviously, since the last downturn in 2008, companies were given lots of money, lots and lots of money, zero interest even, and they took a lot of that money and they put it back into buying shares of their company. That's been the real only growth that's happened in the last 10 to 12 years, is companies buying back their shares and creating false sense of profitability. So now we're in the midst of this pandemic and companies haven't saved up and they haven't prepared for this type of a thing. They're going back to the government and asking for more stimulus. They need to have more bailouts. This is an exact same thing that happened in 2008, and it's really, really starting to get frustrating. The fact that Wall Street continues to get bailed out. When there's fear in the air, the government tends to do a lot of shady things, and Chamath is calling their bluff. It's a really great insight into what's happening all around us and why, when things get scary, it tends to watch the money. The Fed obviously has been inflating the stock market for a really long time, and now they're continuing to throw money back to their friends on Wall Street. The stock market continues to hit towards its all-time highs. So who's left to hold the bag when this is all over? The taxpayer, obviously. They're spending tens of trillions of dollars now. And all that money is going to these huge corporations where if they were allowed to fail, if they could declare bankruptcy, the average worker is not going to get wiped out. Who's going to get wiped out? Their bondholders, their stockholders are probably going to suffer as well. But when it comes right down to it, it should be the fact that the government doesn't bail out corporations ever. Capitalism is capitalism. When it works well, it works for everyone. When the government steps in and creates all of this money out of thin air, we're going to have unintended consequences, and those could be far-reaching. So we'll see where we go over the next couple of years here, but it was great getting these insights and from these interviews with Chamath and seeing how brilliant of a person he is and exactly where we go into the future. If you haven't yet, please like this video, and if you could subscribe so that we can find additional content that's going to be even more exciting in the future. Thanks you guys, and have an amazing day.